Hello, I'm Tammy Green, and this is your Week in Forex from UFXBank. Today, we will take a look at last week's market highlights. Europe and the United Kingdom announced their rate decisions at the end of last week. The credit rating company Moody warned that the United States is at risk of losing its AAA credit rating. This possible change has a global impact and could question the security of all safe currencies. Risk appetite and risk aversion have been the hot topics throughout the markets, as the market has seen new threats, such as that of Moody's possible decision. Surprising news out of Australia indicates that the AUD may not be recovering at the rate that most investors expected. Asian stocks have been trading mixed this week, which seems to be linked to the positive U.S. economic reports as well as the Australian interest rate decision. Japan is taking the debt struggles of countries such as Greece as a stern warning for their own growing debt problem. For a closer look at the markets, we're joined again by foreign exchange analyst John Gibbons. Welcome, John.
Thanks, Tommy.
We received some worrisome news this week from the credit rating company Moody. Could you tell us a little bit more about this release?
Yes, it's quite worrisome indeed that the United States is at risk to lose its AAA rating. The greenback and yen are considered the two safest currencies in the market. If the U.S. loses its rating, this will cause a change in the frame in which we view the economic stability of every country, and investors are sure to flock to the yen.
Well, we heard the same thing from Moody back in December in regards to the GBP and the USD. Could you speak a little bit about risk aversion and risk appetite in relation to this possible announcement?
Sure. Risk aversion is defined as wanting to avoid risk unless adequately compensated for it. This is the attitude of most investors, although greater risk can bring greater returns. Risk appetite is the other side of the spectrum, seeing risk and fluctuation as an opportunity for greater returns on investment. The U.S. losing its AAA rating definitely brings risk into the market, so these two trends will be seen more. The bottom line is that if the financial growth in the U.S. doesn't catch up to the increasing debt, the U.S. cannot sustain this rating.
Which currencies are currently considered the riskiest investments?
The AUD had a surprising interest rate decision this week. Most investors were expecting an increase to 4%, but the Reserve Bank of Australia, or RBA as it's called, decided to keep it at a 3.75%. This subsequently means that the AUD can expect a longer recovery process than was originally expected. The loonie is also considered a risky currency because it's commodity linked.
You mentioned before that the yen is one of, if not the safest currency. Yet we heard some news out of Japan this week that they're possibly facing some debt problems.
Yes, it seems that Japan's government may be getting the message that they must heed the warning on soaring debt loans that has downgraded Greece's credit rating. In a speech a few weeks ago, Seiji Nakamura mentions Greece as well as Spain and Portugal in reference to their increasing debt issue and that Japan must pay attention. Although Yukio Hatoyama's government has not laid out a plan to rein in Japan's debt problem, Japan's finance ministry announced last month that the national debt will probably grow to $10 trillion by March 2011.
On a better note, could you tell us a little bit about the good news from the ADP non-farm employment release?
ADP non-farm private employment decreased 22,000 from December 2009 to January 2010 on a seasonally adjusted basis, according to the ADP National Employment Report. Change of employment from November to December 2009 was revised by 23,000 from a decline of 84,000 to a decline of 61,000. The January employment decline was the smallest since employment began falling in February 2008.
So in layman's terms, this means?
This means that the number of jobs lost in the U.S. were less than expected, which is better for economy. ADP non-farm employment change is the estimated change in the number of people employed during the previous month, excluding the farming industry and government.
Let's get your take on some technicals now. Technically speaking, what is the trend for the Euro USD for the short, medium, and long term?
After breaking the bottom line of the rising wedge in December, the long-term trend of the euro-dollar has changed from bullish to bearish. The fastest drop recorded for the euro-dollar took the shape of 5 waves to the downside, reaching the first bottom at 142.20. The correction of the last drop ended at the Fibonacci retracement of 38.2% at 145.80. Afterwards, the euro-dollar dropped below the last bottom at 142.20, making a weekly and a daily close below this bottom, which was a signal for a renewing of the bearish momentum towards 137.60, the soft target. The euro-dollar recorded lower lows and higher highs. On the daily chart, it's below the 50, 100, and 200 a day moving average since April of last year. So I believe that any gain of the euro-dollar to the upside will be considered as a correction, and the opportunity to sell the euro-USD in the range between 141 and 142 will act as a major resistance level. The euro-USD should stay below 145.80 in the long term to keep the bearish momentum, while 130 is the main target for this huge drop.
Well, thank you, John, for sharing with us. It's been great having you. Until next week, I'm Tammy, and be sure to visit us at UFXBank.com for simple, safe, and secure trading.